Is this just preemptive buying ahead of Labor Day? Hello, this is Justin McKinney with Comstock Investments. Today the big news in the livestock sector was the cattle. Feeder cattle sharply lowered here, about $7 lower at the time of recording this. Fat cattle anywhere from $2 to $4.50 lower, again at the time of recording this. We have a significant amount of time to trade today and tomorrow yet before we can look at the weekly charts and possibly see if we've done any damage. But what is driving this? First and foremost, we've seen packer margins terribly in the red for an extended period of time. We knew it was only a matter of time before they tried to gain some control back. I've already heard of some packers pulling bids down $3 and some being down a little bit more than that with the attitude of take it or leave it. We're not going to pay up to lose more money. So that's overall started the day negative. On top of that, we have Secretary Brooke Rollins speaking in Texas tomorrow and making a major announcement in regard to the new World Screwworm. We've seen this out of the Trump administration before. We saw it back in July. Everybody had this high hopes, high anticipation that when Trump came to Iowa, we would see some sort of trade deal announced. We did not see that. So what are we looking at for tomorrow with Brooke Rollins speaking? Likely, we're probably going to see a highlight of what the administration has done to combat this new World Screwworm, which is that $8.5 million for a sterile fly facility at the Moore Air Force Base in Texas, the $21 million we're spending at the Mexico facility, and that five-prong approach that we've seen before with coordination with the Mexican authorities, enhanced surveillance, emergency preparedness, expanded production capacity of those flies, and new technologies. When do we get that border open? I don't really know. However, we have seen this feeder cattle market dramatically higher. Yesterday, we did see feeder cattle trade sharply higher on the video auctions. 6-7 weight calves bringing well over $4 a pound. Those cattle are going to be tough to break even. We have a lot of nervousness in this market at these prices. So when we get this news out, there obviously is risk taken off the table. We could potentially have expanded limits tomorrow. We're still not there yet. We haven't traded down that low yet today at the time of recording this. But when you have fat cattle future limits at $7.25, feeder cattle futures at $9.25, it does provide a lot of nervousness in the market. On the positive side of things, we have seen box beef rally. Much like before the 4th of July, we traded down to the 360s up to the 390s. Currently, today at the midday, we had box beef trade at 393.27. That was up 278 on a fairly decent load count. So, is this just preemptive buying ahead of Labor Day? It's hard to tell. There was a study out released by a major university that said that price is not affecting consumer demand in the United States. However, at $10 hamburger, we have to assume that at some point we are going to limit that demand. So, as we cut slaughter, we have seen those boxes rally up. It is a good sign. We should see packer margins back in the black tomorrow. It'll be a good sign, but how long they can keep them there, we don't really know. But we do need to kind of keep them there for a little bit, maybe get the kill ramped up a little bit more. Export sales on the beef cattle today were very disappointing. 4,300 metric tons. That's a marketing year low. Down 73% from the previous week. 66% below the 4-week average. And you take Japan out of that, they were 3,200 of that. You take Japan out of that, we virtually sold no beef. Concerning a little bit, but probably nothing really to get overly panicked about, especially when these cattle numbers are this tight. Switching over to the hog market, we did have some big news out in the hog market. Vietnam currently reporting an outbreak of African swine fever impacting as much as 100,000 pigs. That's a three-prong approach that needs to be looked at. Number one, how that affects the hog herd. Will that affect the amount of corn? Will it affect the amount of soybeans needed to import to feed those hogs or soybean meal? That is concerning in the row crop market. The other is, what do our exports do? Do we pick up some business there? Does that AFS spread up into China? Southeast Asia? It's hard to say how big that could be. We did see it back earlier in the 2018 to 2020 timeframe when China had their outbreak. It did decimate their hog herd. We do not need any more demand destruction or any demand destruction with this row crop market, especially with the USDA printing a 180 national yield. Whether or not we believe that yield, Pro Farmer will give us a little bit of an update. They take a huge swath of the corn belt. They don't take it all, especially when we see this increased acres, South Dakota, Kansas, places like that, and where they only hit the western part of Ohio. I realize they only have 4 days to compress this tour. It's a wide tour, but there's going to be some fringe acres that play into that before it's all said and done. Export sales on the hogs came in at 21.2 thousand metric ton. That was down 32% versus the previous week and 19% on the 4-week average. So we look at this hog market. We're hoping to see bellies bust that $200 ceiling. We haven't been able to accomplish that yet. Our BLT season is running a little bit short, and we have the August futures expiring today. We're going to have a huge gap on that chart. It's not uncommon to see a pretty good spread between the August and the October hogs, but will October be able to pull itself up closer to that August? That's the hope. If you have third and fourth quarter hogs you need to hedge off, it's not a bad idea to talk to your broker about getting some orders in place. Switching over to the corn, the soybeans. We mentioned a little bit earlier about the Pro Farmer Tour coming up. It will be interesting for me to see what they do come up with for yield. Take it a little bit of tongue in cheek as what price direction do we have working. Yes, we have these big numbers. The USDA numbers are what's traded, but what is driving the market? We do have an export market that has been just smoking hot. Today, we saw net export cancellations of 3.5 million bushels. Not a huge deal. We're resting at 2.77 billion bushels for the year. That's up 26%. We are on track to meet the USDA's 2.82 billion bushel program, up 25% year over year. I have been talking about this for 3-4 weeks. It is the silver bullet in the corn market right now. We do have overall demand picture that is fairly decent on the export side of things. We're the cheapest corn in the world. Yes, we have not seen China step in to buy anything, but as I mentioned in the hog section, how much corn does China actually need right now? And what are they going to need in the future? Brazil does have a big crop. Will Brazil have the fobbing capacity to ship corn and ship beans out of their ports and cover the Chinese demand? It has not happened before. We get some pickup business as those ports get backed up. What they choose to buy from us this year, will it be corn, will it be soybeans, remains to be seen. I would anticipate some buying, but we're unsure of what we're going to have so far. The positive on the corn exports. Let's look at the 25-26 export picture. We are sitting right now. We had strong sales again today. 80.6 million bushels. Great export sales. Total new crop sales of 544 million bushels. That's the highest in 4 years. The second highest on record for August. Again, Mexico was the big buyer. Unknown is a big buyer. Japan has been a big buyer. Taiwan has been a buyer. We're getting business across a wide platform. I'd like to see that. Multiple buyers step in. Now, if we could get additional business, that would be great. But we're getting what I would call our core business to come and buy. It's probably related on price. Could be a little bit on bobbing capacity down south. But it is good to see those markets come here. On the soybean side of the world, we did see cancellations of 13.9 million bushels. We were anticipating this. The numbers look like we may see a little bit, but total commitments of 1.878 million bushels. That's up 11.5% year over year. It's right on projection where we need to be. We could fall a little bit short, but our season's wrapping up. I'm not overly concerned about that. New crop sales, again, sold 41.6 million bushels. That was above the expectation, but driving home the nail, we continue to see total commitments, the lowest in 6 years, the second lowest in 19 years, 173 million bushels. We have this big crop coming. Whether it's a 53 plus USDA crop, larger than that, I'm of the bias that we've had a lot of wet feet west of the Mississippi River. It may be just a smidgen smaller than that, and our stocks are getting drawn down. So what are we going to do with these beans? We're going to need to find a home for these beans very quickly, and the export market is not willing to take them. So we must put carry in the market. How much carry that takes, what price we have to get farmers to keep bushels off the market remains to be seen. But that is something to keep an eye on. If you have to move your soybeans this fall, I would take a hard look at selling some rallies here as we get there. Possibly some re-ownership strategies as our carryout has shrunken down. Doesn't look burdensome. Global supplies maybe a little bit different, but domestic demand is definitely here for what we have. On the wheat side of the world, exports came in at 26.6 million bushels. That was in line with expectations. Total commitments of 404 million bushels, up 24% year over year. The strongest in 8 years and for the first 10 weeks. Great export sales on wheat. We continue to struggle on the row crops to catch footing for corn and beans, and wheat just seems to have a hard time finding any sort of bid. This is Justin McKinney with Comstock Investments.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.